If you're looking for a simple and easy way to analyze the gold market, well, you're in the right place because in this video, we're going to talk about my game plan for this upcoming week on gold. And we're also going to talk about what it may look like as far as entries, exits, and profit target zones on this market for next week. And in this video, what we're going to do is we're actually not going to draw all of the lines like we normally do every single week. We're going to just go over what we drew last week and then come up with a game plan for there. So if you didn't see last week's video, then go ahead and check out that video just to understand a lot better how all of these lines on this chart were drawn. And let's just go ahead and get right into this video. So I did clean up my chart a little bit. I had some stuff on here that was a bit messy. Actually, I need to remove these as well. And basically what we're going to do here is we're going to start off on the weekly time frame as usual. And if we look at price action right now, we can clearly see that this candle right here is a weak bullish candle. This is how this market closed for this past week. And this doesn't really give us a whole lot of information about the upcoming week. But when we go down in time frames, we will see things that'll basically serve as clues as to what the market may do next week. Now, one of the key things to keep in mind is that next week is FOMC, and that is the Federal Open Market Committee. And that's basically when they decide whether or not they're going to keep the rates the same, raise the rates, or decrease the rates. So this is just a really interesting time that we're in right now, especially because it's the end of the year. We have a new administration coming in at the beginning of next year, and that can really make gold go bullish or bearish. So let's just hop right into our analysis. So we can see nothing really to do here on the weekly time frame. I don't really want to adjust anything because I feel like we're going to have a lot more data on the lower time frame. So let's go down to the daily. And now we can see kind of clearly what has happened. So this happened a couple months ago. If you're looking for a simple way to analyze the gold market, then you need to check out the Profitable Gold Market Blueprint. You're also going to get some profitable entry levels and strategies that I currently use inside of this market. Maybe you're tired of just missing out on gold's big price moves, wondering how people are catching hundreds of pips, sometimes thousands of pips. And if you tried to understand this on your own, but ended up feeling overwhelmed by all the charts, reports, and all the things that you got to look at, you don't have to think about that at all. It doesn't have to be that hard. You can unlock the secrets to consistent profits inside of the gold market. And this is going to be insanely helpful for you, easy to follow with clear and actionable steps. Some of the things that you'll learn inside of this is learning to decode the gold market trends like inflation, FOMC, geopolitical risk, and so many other things. And then you'll master these simple strategies that follow the big players. So basically the banks and institutions, you'll learn what they're doing and how to find the information for what they are doing. And then also you'll be able to spot profitable opportunities and avoid some of the common traps that people fall into when it comes to gold. So that way you can stop second guessing yourself and just enter the market at the right time. And then you'll also understand key support and resistance levels. So that way you can anticipate the moves instead of just reacting to them. And then of course you'll save hours and hours of research because all of this is condensed, compact, and just ready to use. So check out some of the things that people are saying about this. This is actually one of my fastest selling products, and this price is not going to last long. So go ahead and check out the Profitable Gold Market Blueprint. This clock will have a countdown, and once the timer runs out, the price will increase and you will have to get it at the new price. So check this out. You won't be disappointed. This stuff happened a couple months ago, or actually last month at this point. And you can see bullish, bearish, consolidation, and then a little bit of bullish activity. I was very tempted to get into this move. It was just not the right timing for me. Some of these things moved overnight and I was sleeping and it just kind of happens. But basically, as we can see, we did form a resistance right here on the daily time frame. So what we can do as far as adjusting our lines, we can take this level and we can actually push it up. Now you can put it at the wick. Let me zoom this in a little bit just so that way you can see exactly what I'm talking about. So right here, you can see we can place it at the body of this candle, or we can place it at the wick. For right now, I'm going to place it at the wick. The wick stops about right here, so the line is touching it like this. So we're going to leave that alone. Let me zoom out so that way we can see more of the chart. Okay, cool. So there are only 5 or so days inside of this market. So pretty much we're going to focus our energy up in this section right here. So now we can see that this was a key level that we identified last week, and this weekly or this daily candle did break and close below. So this tells me that there is a high probability that price will continue to go low, but how low, no one knows. And then looking at the other levels, there's nothing really that I want to change on this daily time frame. So let's go ahead and go down to the H4 time frame. And now that we have a lot more data here, I'm still seeing, pretty much the same things that I was seeing on the last time frame, but we can see very clearly that we do have wicks that are piercing this key level. We have it tapping in a couple of times, and that's why I put this line here last week. So we're going to leave that alone. I did have this arrow. We're going to get rid of that. And then I had a level I was tracking, didn't take any trades, get rid of that. So this was also from last week. So we can see right now, so this is looking really good at this point for continued sells. And when we look at this level right here, we can keep this level right here, or we can move it up just a little bit, or what I actually want to do is just to move it down. And the reason why I want to move it down is because we do have a support level that has formed right here. So this level is now 26.58. You can round this up to 26.60 just to give you a nice round number. Same with this level. Like I said, we didn't touch it. This level is at 27.21. You can say 20. And I wanted to move this to the spot because this support formed and then price just pushed up tremendously, tapping into this previous key level. So I definitely wanted to make that minor adjustment. The rest of this is looking okay. So I do see something over here, but I think I want to leave that alone until we go down to a lower time frame. And then this is still looking great based on where I placed this last week. So just to go back, this level right here is 26.10, and then this level right here is 25, let's just say 60. So let's go down to the H2. Okay. All right, good. So now that we have a little bit more information, these were wicks on the last time frame. Now they're actual candles. So now this gives us a little bit more information. And since this high was formed, this new high, because it's higher than this high over here from last month, since this was formed, what we can actually do, I'm going to make my line a little bit slimmer, but we can actually move this level up. So that way it's sitting on top of this, because this is basically a resistance. We have a bullish candle next to a bearish candle, and then price went down tremendously from this point. So this is a resistance. So now we're sitting at 27, let's just say 25, really nice level. So that is something that I'm glad that I waited to change on this time frame. Okay, and if we take a closer look at this level that we adjusted on the last time frame, I do see that I want to make this level a little bit slimmer. This is just personal preference. You could have your zones as wide as you want, but I like really thin lines. And what I'm going to do is I'm actually going to pull this level. This is a little tricky because we have a resistance, a support right here. And then we also have a support here, and then we have a support here that was broken. So I'm just adjusting it just slightly. Right now we're sitting at 56.57. And this level here, still looking good. We still got price that tapped in to this level last week, or maybe a couple of weeks ago now. And then this is still looking good. Great. So now let's go down to the H1 time frame. All right, so now we can see that this level that we adjusted on the last time frame is looking really nice now, sitting almost exactly at 27.25. And we have these levels that make sense. So this was our support that was formed that we identified a couple time frames ago. And now we are sitting really nicely. So just for those who weren't watching this last week, this box was drawn because I like to draw boxes on my charts to represent consolidation, and this is basically what this was. So when I see consolidation zones, that's the signal for me to not trade. So I like to block them out as if they don't exist on my chart, but you can do whatever you want. But this level that we have here is still looking good, and then this level down here is still looking great. All right. So based on this alone, I'm going to give a game plan because price could work out in the beginning of the week before FOMC, and then after FOMC, price could pretty much do anything that it wants. So, a bit disclaimer there. So, while I'm looking at this right now, if I just wanted to take a technical setup, then the first thing that I see, especially since we have this area here where basically it's just a huge sell-off. We started off the week with this consolidation. Price broke out of the consolidation, and this was the trade area that I missed. But anyway, actually I missed a couple trade areas in here, but a trade area that I missed. But price pushed up to this previous resistance, and we know that this is a previous resistance level because we have this over here. So it came up to this previous resistance level and then sold off tremendously. Now it's back below that level that it was before. So this is why I'm going to say what I can see price doing is if it doesn't break this completely, it could do a retest and then continue down to this level. So that would be one trade idea, just especially because we don't have a whole lot of information to go off of. I mean, price, since it's back in this zone, it could do exactly what this did. It could basically just consolidate, and it'll take days. Actually, this was almost a week for this to break out of consolidation. Let me just measure Sunday. Okay, yeah, this was a week where basically it just consolidated the entire week. And there's a possibility for price to do that again. We just have no idea. But another thing that I see inside of this market is the fact that we do have a minor support that was formed right here. So price could come up, retest this key level, this really strong level, and then if it rejects and it breaks this, then that could be an idea for continued sales all the way down here. I'm going to switch up my arrow really quick just because I want to stay consistent. All right, so this is the trade idea right here. But basically, the trade will basically be this move from here to here. So that's basically what I will be looking for the downside. And let me pop that right there. Okay, so the other trading idea that I have is essentially the upside. So basically anything above here. Now I want to see some candles that close above this level, maybe form some market structure or something like that before I just blindly get inside of the trade. But essentially I would be looking from this area, this 2657 all the way to up here. And price likes to go back to areas of previous resistance or support. So this level is a previous area of resistance, as we saw, or as we now see right here. This was formed based on this area right here. And yeah, it's not perfect. The market is not, but basically it came back into the same zone and did the exact same thing. So that's why the idea that I have of price going here and then selling off and tapping into here is because of this over here. So some patterns in the market repeat themselves, and I'm not talking about like candlestick patterns or anything like that. I'm talking about pure market structure. So that is the idea there. So I do have some targets along the way. I'm not just going to be trying to ride this all the way up because this is 675 pips, which is quite a bit. So basically I'll be making these levels based on market structure. So right here we have an obstacle. And that's not a target, but it's just something to be aware of. My target will be about there. So let me measure this and just see what price will look like. Okay, 150 pips, totally cool. All right, so the next target will be roughly here. And if we measure this, then we can see that this zone is 170 pips. Awesome. And then the next target will be from this level all the way up, and then that's 341 pips. And the biggest reason for marking this off based on market structure is because if this area was an area where price saw a struggle in the past, it has a higher potential without enough volume to see struggle again. So that's why I have these as targets. And then the target up here, I mean, you could actually or at least the way I'm looking at this, this would be the true area, not really up here, because it struggled in this area multiple times over here on the upside. And then when it did a retest, it struggled as well. And then it sold off tremendously. So these are pretty much different ideas. And just to call these out, this is at 27.18. This one is at 26.89. And then this one is at 26.72. And then, of course, this was our key level at 26.57. So if you enjoyed this analysis, then go ahead and let me know in the comment section below. Give this video a like so that way I can continue doing these videos, because this video almost did not happen. I just came from a great massage and I am feeling very relaxed. So afterwards, I'm going to chill and not think about this at all because it's the weekend. Anyway, have a good one. Thanks so much for watching.